Hello. Mic test. Mic test. Hello, guys, and welcome to the 49th edition of the Trading Opportunities webinar. This is Nirav, and currently I'm just trying to check. Yep, yeah, now the stream is live. So, hopefully, you guys are doing well. Let me check the audio. Yeah, audio is also working fine. So, good morning, good evening to you guys, depending upon the time zones you are in. I hope you are having a good day. And obviously, before we even start, first of all, let me know in the comments, is the audio and screen share working fine at your end, guys? Let me type in the chat. Hey, Jill. Hi, Steve. Good to see you in the stream. So we are near our very important mark of 50th webinar. We are currently in the 49th, and since everything seems to be working fine, there was some improvement. Even alerts are now available. We can now start off the stream. Okay, so let me just start off with very quickly on the legal side. Here is the quick disclaimer on screen suggesting all content presented is for educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for your trading and investing, you yourselves will be liable for your profit, your loss, or loss of profit, right? And rest of the remaining disclaimer, of course, you guys can check it out yourselves. Okay, so with that out of the way, let's now head over to the introduction part, and let me give you a quick introduction about who I am and about my work, because this is a live stream and not everybody knows about my work. Some people might be joining in for the first time or might even be watching the recording for the first time. So where is it? So first of all, this is my website, 50eyes.com, right? I'm the admin and owner of this website and also the YouTube channel with the name of 50 Eyes Market Analysis, where this live broadcast is currently being done. Also, we are broadcasting it simultaneously on LinkedIn. So if you are there, do not hesitate to say hi, right? And the way we do these webinars is we do one on every Monday, Wednesday, and Friday at 2 p.m. GMT. Right? We have so far done 48 of these, so this is the 49th. You can check all the past webinars by hitting the live button on my YouTube channel and check every single one with timestamps and everything. So far in the 47 webinars, we have got 56 big moves. Okay, and we will see what happened about the discussion we did in 48th webinar today. So this number will obviously be expected to increase. And lastly, before we proceed, here is the forecast accuracy of my work for the last 6+ years, actually 6 years here. Consecutively for 6 years, let me start from the bottom. We have had a forecast accuracy of 80% plus, sorry. And let me see how long it takes for these spreadsheets to load. But whenever they load, you can see that 2016 we had an accuracy of 83.34, 2017 87.5, 2018 84.61. So now the spreadsheet has loaded up. So the way these records are constructed is we take the name of the instrument, the date, the discussion itself, what was the analysis, and the actual link for the video or the live stream which we did, in which we discussed the analysis. Later on, if the analysis worked out, we give it a +1. If it did not, we give it a -1. So far, I've been doing this for 6 years, and this is an industry-leading track record, because generally even an accuracy 60% is considered very high in this field. So 2020, 2021, you get the idea. We have maintained 80% plus accuracy and gone as high as 90, right? So with that out of the way, let's now head over with our actual content of the webinar. And yes, these are the instruments which we will be covering in the webinar. First of all, we'll go over the charts of Euro USD, followed by Here it is. This is this Euro USD followed by EURCAD, USDJPY, EURJPY, Crude Oil, Gold, S&P Nifty, and at the end Bitcoin. By the way, do keep in mind, guys, I am also thinking of doing a separate stream for the NSE stocks and not even stocks, most importantly, focusing on Nifty. So it is possible that in the near future we may remove this and this thing will have its own streams, right? And the timing I'm currently thinking after market around 4 p.m. IST on Tuesday and Thursday. So let me know what you think of this. Obviously, I'll make the announcement again when we discuss Nifty because it's just a thought and I want to run it by you guys and see what you think. So this is the way we will proceed, and let's now head over to the actual discussion. First of all, as you can see on screen, we have the chart of Euro US dollar, and it has not really given us a clear trading opportunity as of yet. The count is still the same, which we have been following in the last webinar. Nothing new has happened so far, right? So what was the count in the last webinar and what were we thinking? Let me just quickly run it down. So first of all, this is our point of reference or the starting point of the analysis around 1.10301. From this point, we have two, three analogies. The first analogy or the bearish one, which we have in mind, is that we were thinking that maybe this is a impulsive downward progression, and in an impulse, we will have something like this. So the first leg down is called a one. The correction to it is called a two. The next leg down is called a three. So for the correction will be called a fourth, and so on so forth. The fifth down. Now, so far, we can see 1 and 2 is already complete, and we think we are within the wave 3. Within the wave 3, we expect that because that is the fractal nature of Elliott Wave, because that is the principle I'm using currently to discuss this market. So, as per the fractal nature, we expect that in wave 3, we will again have 5 waves inside of it, right? So, here we have the first leg possibly and the second leg of the wave 3. What basically that means is that if you expand this wave 3, this whole leg, then it should again look something like this. 1 2 3 4 5, right? So within this smaller, let's say Roman 1, Roman 2, and so on so forth, if we try to plot this rough outlook on the actual chart, what we see is that this is the possible outcome, right? So this is just one of the possibilities. We do not have any confirmation for it. We already have discussed it multiple times, and the way to play it, as we have discussed, is that if you are interested in swing shorts, then you could have already entered partial shorts near the low, which is around 1.053, and you can keep adding as the market continues higher with your actual stop around 1.08042, right? And the conservative idea was that once the market goes up and then starts going down, then we'll take it as a breakout trade or breakdown, whatever you would like to call, below the 1.0529 low, right? Basically the last low or this low, right? So both ways, we are still thinking of this market as a shorting opportunity, but nothing like this has happened. And even if you have already entered swing shorts, which we generally always advise that if somebody is entering swings, then if you enter with 10 lots, then near the low you will only enter 1 or 2 lots, and then you can either wait for the market to go up or reverse, or you can just let it go higher. And if you are able to determine the turning point, then add 2 or 3 more lots followed by more towards the downward direction, right? So long story short, we are still looking for more clarification on this counter, right? And we are holding off our shorting opportunities. As I said, we will be more focused towards the breakout opportunity. As you can see, I have placed an alert near the lows, and once this alert is triggered, I will revisit this chart and think of adding shorts. Currently, I'm not holding anything on this counter. Nothing much to add other than this wait of and watch scenario. And yeah, secondly, if it goes ahead and takes out the high of this wave 2, then we will consider the whole structure to be a corrective leg down, right? Confined within this parallel channel, and we can expect this to be another correction to the upside, right? But we are not interested in that, and we will not currently be looking to trade that. So the current setup I've discussed, and it's a wait and watch for now. Let me know, guys, if you have any specific questions in the comment section. Jill, Steve, and others who are in the live chat, of course, please let me know if you have any doubts. If not, please do type in clear, and we'll move ahead with our next chart, which will be EURCAD. You're very welcome, Jill, for the confirmation, and Steve and Fraser. Okay, in that case, let's load up our next chart, which is already moving as expected. So if you guys recall, we have already caught the upside movement on this one, right? We caught it the last to last webinar, or maybe before that. Long story short, we have already been holding longs on this counter from this range, roughly speaking, from within this range. And we also had longs on this counter somewhere within this range as well. So we have entered longs multiple times on this counter. It has already achieved our minimum target, which was of the level around 1.46457, right? And after that, we have just been trailing the longs. If you were able to capture this move when we first predicted or the time before it, like either this long or this leg, let me know in the comment sections for other viewers to take note of it, right? If not, let me just discuss what we are currently doing. We are currently of the view that this market has more upside remaining, and I'm currently rearranging my counts to reflect the same. So this is not the exact way the market will proceed, of course, but this is roughly the way we think the market might head higher. First of all, currently we think that it is in a corrective wave 4, right? After that, it will go up for the circle 3, followed by the last leg up for the circle 5. So in short, we are thinking that this market has at least 1, 2, and 3 legs in the upward direction. So even if this count is not completely right, it has 3 legs in the upward direction. That means at least 1 leg is there still. Okay. So based on that, it is still a long. Of course, we have already entered longs, and it's a trail for now. Also, if you are looking for new entries, currently it looks like it is in a sideways movement for the wave 4. So what we can do here is wait and watch how this price action unfolds, and again enter for wave 5 up. But as I said, since we are already long, I'm not going to look into those opportunities or head in lower time frames for it, right? So EURCAD, keep holding it, keep trailing according to your entries, and expect at least 1 and maximum 3 legs in the other direction. So I would say even much higher profit levels are possible, right? So nothing much to add here. If you guys have any specific questions, please do let me know in the comment section while I run some other or point out some other things here. Oh, as you can see, it has already achieved our 1.618 level. Next, we can expect it around somewhere 1.487 possibly, but even better would be if you can analyze this on a lower time frame. If you are looking for targets specifically, then you can use this correction to predict the upward movements. Again, we are not interested in any of it because we are already holding profitable longs, basically free trades now, because we already have crossed much higher than our entries. So with that case, there are already confirmations. Thank you, Steve, Fraser, and Jill for your confirmations. Right. With that, let's head over to our next chart, which will be USDJPY. Yes, USDJPY. So this is the count we have been following on USDJPY. We have actually two counts, but this is the main one we were following. Let's see what we discussed in the last webinar, which was conducted on 10th of March 2023. Around 21. So this is the time, roughly speaking, when the last webinar was conducted. Our view was very clear. I very specifically pointed out that it looks like this market is heading like this: A down, B up, and C down. right? And we have also mentioned the fact that we generally expect the market to stop somewhere within this range that is basically a little bit lower than this double bracket today, but this market has decided to go on much lower. Not sure why it is not showing. Maybe if I refresh, maybe it will show. But we have also counted the internal structures for the leg which has played out to the downside. Doesn't look like we have that. So yeah, this is the internal structure we were thinking, because I remember last time when we discussed, I did mention that it looks like to be heading down as a possible impulse, right? So far we have what do you call move that played out in the direction we expected, but since it has moved much more than our expectation, it is suggesting that possibly our count is not the right count, which is something I have pointed out multiple times already. But it looks like the short term analysis is working out, and possibly the long term analysis we will have to update. So long story short is currently things have worked out on USDJPY. It is a plus one for us because we have already discussed this impulse down in the last webinar, right? But the upcoming move, which we think might be the wave C up, looks a little bit looks like we may need a little bit more confirmation. So what I'm going to do is I'm not going to enter any longs on this counter unless, of course, they are completely intraday or short term, very short term. But from a swing perspective, there is no confirmation as of yet. And what we need to do is we need to at least let the market go higher and take out our important levels around 135.78. Unless the market goes there, we do not have any confirmation of further upside. And even if you do wait for this level and this level is taken out, upside may be limited, but the downside risk is going to become very huge. So, not the best trade from a swing perspective, but yes, we have the outlook and we might be able to pull some short term intraday trades based on that, right? One quick idea you can have is you can use this wave 4 level also as an alert level, and short term intraday longs above this are also something we can add. So I'll just push an alert for it. So long story short is analysis suggests more upside. We have no confirmation. Clear confirmation is above 136.8, but I personally will start looking around 134.5 to for short-term longs, or maybe even earlier. And that's how the story goes for it. Worked out in our favor, but still unclear. Let me know, guys, if there's any particular doubt on this chart. Otherwise, we'll move over to the next chart. Let me see how many trades have worked out so far. So this takes our tally to 57, last 48 webinars. And of course, if some of you guys were able to capture it, please do let our audience know that in the comment section as well. Okay, so thank you, Jill and Fraser, for the confirmation. Let's now head over to our next chart. Okay, that would be the chart of Euro JPY. So again, another one which seems to be working out for us. And let's just quickly check what we were saying in the last webinar and where were we at. Let's go to the hourly chart for that. Keep in mind on this chart, I have not changed anything. I obviously have multiple charts of EURJPY open. So this is the one we discussed in the last webinar, and it is as it is since then. So we did the webinar on 10th of March, and the time was around somewhere roughly speaking here. So this is where we discussed this chart. Let me move the line there. This is where we discussed the chart. And the view was, as you can see with this arrow, was that the market will first go a little bit up and then head lower. Okay. So as you can see, this has actually done precisely that, not even something different. It has gone literally up and then gone down. So it actually worked out pretty much in our favor. One second, guys. And I'm not aware how many of you guys are trading this counter, but if you were, we did catch this move in live market in the last webinar. If anyone of you was able to participate in it, well, it will be nice to let the audience in the live chat know that. Right. So with that out of the way, let's see what is the analysis now. By the way, let me quickly also update the number of trades which have worked, including this one. Okay. Okay. So yeah, as I was saying, we were expecting this market to do this. It has already done that. So now let's see what is the exact way we think this structure is progressing, and see if we can draw some conclusions out from that. One more thing I'd like to point out is that we have already discussed that the downside target should be within the range of 142.54 to 141.857, as you can see with this white box, which we have, right? And this market not only did achieve those targets, it is very important to note that this market also tried to go lower than that level and was bought up with swiftness. The spike suggests that this level was actually respected very nicely. Again, we were not only able to capture the downward movement, we were able to capture it till the extreme target, which we have already discussed again. So I know some of you guys don't trade these currency pairs, but I think some of you who do trade, I think there are some people who do trade it. If you are able to capture the move, please do let me or let us know in the comment section. So see, the situation right now is if this count is correct, then WXY is over, then that means new upward leg may start. And that also means that we need to see at least a break above this CN color channel, or may even call it bluish color channel, right? So until we see a break above this channel, there is no very clear reason for adding longs. But if you want to become more aggressive, take lesser risk, but lesser chance of success as well, then yes, from a swing perspective, it is a long or partial entry long with the stop loss placed near the low. So I do not mind these kind of trades. Perhaps I'll wait a little bit more and let it show a little bit more strength. Maybe a retest of the trend line would also be good to see if it happens. But for now, I'm not adding longs. But as I said, from a swing perspective, this counter can be treated as a clear long opportunity, right? Let me know, guys, if you have any doubts or queries on this counter before we move further in our discussions. Exiting channel upper bounce parallel. I'll just push a simple alert here. So what really happened is that if you are using a log chart, then sometimes the movements are not considered precisely on trend lines and parallel channels. That's why it gave me a false alert. So another thing to keep in mind. Okay. Thank you, Jill and Fraser, for the confirmations. What about the other participants? I can see a lot of you are in the chat. Would be nice to see a little bit more interaction here. Okay. So now let's head over to our chart of crude oil, which seems to have given me an alert on the downside, and I have yet not entered any positions on this. Let's see what's going over there. As expected, another sort of false kind of move, I would say. Okay. So first of all, on crude oil, when we did our analysis, we had two views. One was that maybe this was a one up and this is going down for a two, or maybe the two is even complete and then this will head up straight up. So now what it looks like is it's definitely possible that this is the two and then it will head up straight. And this count will not come into play until we see a clear break, or let's say the break of the level around 81.943, which is basically this triple top kind of formations break, right? So this is our bullish setup on crude oil. Secondly, we had a bearish setup running and we were thinking that maybe from this point of reference around the price level of 893.86, we were thinking that maybe this market is doing something like this. One second. Let me update it. Yeah, no, that was not the point of reference. This was a point of reference, 76.605. Sorry about that. And our view was that we were thinking of something like this, right? Now, if this was the case, then this would have been considered a triangle formation, and the triangle formation, the trend lines would look like this. And if these are the trend lines, let me redraw them properly. And if these are the trend lines, then the break below this BD trend line is generally what we call a shorting opportunity. So this trend line seems to have already been broken. I already received an alert for it, right? But the market has again gone back inside the trend line or inside the congestion zone, right? The break also seems to be rather fast, and I would have wanted to see the market sustain below this trend line. Nothing like this has happened. So what I actually did was, instead of taking short, I just pushed another alert near the low around 70.91. So in case this actually does go and trade below this level and then start to go lower, then I'll get an alert. And if I am able to take that at the right time, I might enter some short trades on this, right? Otherwise, since there is no confirmation or clear pattern formation yet, I am still out of WTI crude oil. Again, just for concluding, for the people who are watching these webinar series for the first time, we have already discussed this pattern so many times, and this market has literally done nothing but remain range bound. So we are very less interested in trading this counter for now. That's about it for crude oil, guys. If you have any questions, doubts, queries, please let me know in the comment section before we move over to our gold chart, which is actually moving precisely as expected. Hey, thank you, Steve. Jill. Okay, so in that case, let's head over to our next chart, which is XAUUSD. This is the one we are following. So last time when we discussed gold, we were of the view that we thought that from this point of reference around the price level of, what is this, 1560, sorry, 1960, let's say, right? Roughly speaking, from this level, we were expecting that this market has been heading lower for a 1 or A, and possibly then back up for 2 or B. Last time when we discussed this counter, we were of the view that this market can continue going up, and we already estimated the price level where we will start looking for possible reversals, which was the resistance level in this white box, right? And this white box was basically, or is basically, near 1900 to 1880, let's say. So between 1900 to 1880, we discussed very clearly in the last webinar that this market can completely just straight away go up. right? And the secondary thing we assumed was that if this market goes up, then we might start seeing some sell off or clear reversal either within this box or a little bit above it. So currently the situation being that the market has already gone above it, and currently we do not seem to be seeing any clear red candle on this hourly time frame. It is still a wait and watch. Secondary thing is that we already have the next incoming target around 1926-ish level, right? Around 1926-ish level, we think that this market may show some clear resistance or reversal, right? If it goes above that, then possibly we need to update the whole count, and possibly the whole market is actually bullish and we are wrong, right? So this is the current outlook on this counter of gold. And I would like to add one more thing here, that even though this is going completely above, we already knew about this target, and I already suggested that small counter trend longs may become possible or are possible actually. We even discussed a little bit of a possible opportunity in the last webinar, but it was intraday, so we will not intraday, and we did not even discuss it in great detail because it was counter trend. So I'm not going to consider this upward movement as an opportunity, but I personally was able to see it clearly. Actually, right after the webinar, there were some possibilities that were forming. So that's about it for gold. It's a wait and watch, and the only thing I'll do is I'll push the alert a little bit higher, and I'll also like to know if the market actually goes to the next reversal level or possible reversal level, I should say. In both cases, I like to know and strategize again by looking at the actual chart. So that's about it for gold. Wait and watch. No reversals yet, so wait for possible reversal opportunities. And if the market sustains above 1926-ish level, then possibly the bearish count is wrong, right? Let me know, guys, if there's any doubt or query. Otherwise, we move over to our next chart of S&P's 500. Now, S&P 500. Thank you, Steve and Fraser, for your confirmations. It looks like yeah, there it is. Sometimes the chat does not pick up the confirmations very fast. So, anyways, let's move ahead with our next chart of S&P 500. But before we do that, I'd like to quickly request you guys to very kindly hit the like button in the YouTube, or if you are using some other platform, then on that, because it takes an extreme amount of time to do these webinars. Not only to do this, but to prepare the analysis and present it in front of you guys. So, if you have not already done that, kindly hit the likes on the stream, right? Before we move over to the chart of S&P 500. So let's head over to this chart and see what's going on here. First of all, if you are already watching these webinars, then we were very much aware of this fall. We were actually able to capture it, and some of the participants were able to capture at least or more than 120 points on this leg down, because we obviously discussed that in live session, and it actually played out a little bit more faster than expected, right? I personally, as I told you guys, I was also net short on the indexes, right? And I was holding short even after this market went to this 3860 low, right? And 3860 low, or whatever that was in the last webinar. Let me just quickly check so that we can talk precisely or in precise numbers. Yeah, so I remember now. So in the last webinar, when we were discussing, it had already achieved our target minimum, which was actually the price level around 3920, basically below this low. And even after going below this low, I was net short, right? And we were discussing this market somewhere around here, roughly speaking. So the level was around 3890. when we were doing the webinar, roughly speaking, obviously. After that, the market again went lower, and it is again sort of looking like it may have completed the move. So yes, I still am holding net short on the indices in total, not just the S&P, or not specifically the S&P, I should say, but I am still holding net shorts overall on indices, right? And the reasoning is that if this market really goes above this resistance level, which is forming between 39.20 to 30, basically this high, then I should not hold any further. And because we have already gained so much of movement from our initial entry, I am at the luxury of keeping the shorts and waiting to see if there is any bigger move forming on the downward side, which I think might be the case, right? So basically, long story short, the minimum target is achieved. I am holding my for checking out my own analysis, which is suggesting possibly that the market may head lower for 3760 to 3642 levels, right? So these are my own personal targets for possible continuation to the downside. Let me just type them. This is 3640. So this is the expected movement in case the market decides to continue lower, right? And of course, it is also possible that the market does continue lower, but after forming a correction first, something like this, right? However, what I've found is that in cases like these, when the markets are extremely weak, we generally tend to see extremely sharp moves. And if you are not already short, you may not get a chance to enter, right? That's why I have held on to my positions the way I have held on. Hopefully, there is nothing of further discussion or doubt, I should say, on this counter. If there is, please do let me know in the comment section, or please let me know what happened clear or understood before we move over to our last two charts of Nifty, followed by Bitcoin. Okay. Also, of course, if you have not yet hit the like button, if you have forgotten, then please do hit that in the stream or whichever platform you are watching it on later on, so that the algorithm picks up our content and we get a little bit more reach, right? Thank you for the confirmation, guys. Fraser, Jill, and Steve. Let's head over to our next discussion of Nifty, which will be followed by the last discussion on BTC. Again, of course, guys, make sure you also share the content. We still have to get a little bit more reach, as I mentioned so many times in the webinar, that we are looking for reaching at least 500 or more people per webinar. We are currently around 300 something. So more parts, or what do you call, efforts from you guys are definitely required currently. Nifty. Okay. So if you guys remember, I like to point out to our discussion done around 28th February. So whatever webinar we did near 28th February, one day ago or one day after it, whatever. In that webinar, I very clearly mentioned this thing, and with just this thing and not even considering counts or anything, I mentioned that there is a possibility of an extremely huge movement downwards. First of all, guys, let me know in the comment sections if you remember it, because if you remember it, then I'll elaborate a few more points on it. If not, then I'll just cover the actual point which we discussed back then and move on with the current price action. So I'll just wait for a few moments in the comments. If you remember the important points we discussed regarding the price action within this box, do let me know in the comments very quickly. I think you guys were there. I remember. Yes, Steve says he does remember the points I discussed there. Hello, Madhavji. Good to know you were also there and you remember the points we mentioned. Jill also says he remembers, right? So now, instead of going too much into detail, you can watch the webinar around 28th February. Anyways, the point I mentioned was, now coming to the actual price action, was that generally this suggests an extremely bearish scenario. An extremely bearish scenario suggests that this low will be taken out very soon, right? But the important thing was, it will most likely be taken out in a way that most participants will not be able to enter, right? So there are many ways the market would do that, right? I was thinking very simplistically at that time, and I was thinking that 1 or 2 days it will go up here, and here it has done some drama, and then next day it will just open gap down, right? Something like this. It will open somewhere here and just fall with this much gap, right? So it did not do anything like that. What it did was, it trapped the participants in the wrong direction using something else, which was taking it higher than expected, right? It took it higher almost, I think, to 50%. Let's just quickly check. Why not? So if I draw the Fibonacci retracement from this price high around, 1 second, I have, yeah, works. So from this price high around the level of 18,140 to the price low around 17,250-ish level, 260-ish level, let's say. So as you can see, this market actually went to the 50-60 box, right? So this is a known resistance level. But the important thing was, in extremely bearish scenarios, you generally do not see a retracement that huge. You do not see a retracement going back to 50-60 level. Generally, the market will give a much smaller retracement and then fall, right? So this was completely unexpected. At this point, I was even trying to consider the possibilities that maybe it will break higher. But then when it broke lower here and then there was this gap down, I was holding net shorts on this counter. And yes, I have not even booked anything yet. I am still holding net shorts. I checked the positions today before the market closed. They were giving extremely big profits, as you would expect with a move like this. So I am still holding net shorts on the indices on NSE. Right. And two things will happen tomorrow. Either the market will give some correction and then fall again, or the thing which I have been expecting for so long, a big gap down, may happen. The worst case scenario is that it will open somewhere in the middle and then start going up, in which case my profits will soon possibly get wiped out and I possibly will have to get out around break even. But then again, that's the risk you take, right? I have was always having a bearish scenario in mind for this counter. So if I'm not going to play it with my own money, then what's the point of having analysis, right? So long story short, an extremely huge movement, a gap down, and further downward movement is still possible. That's the reason I did not book any shorts, and that's why I'm still holding it. As far as accounts are concerned, there are 3 or 4 multiple ways which we can use to count this market. But let me just go over the one which we have been discussing, I think, in the last few webinars. Let me see very quickly. 1WX. YXZ. Yeah, okay. So this is the one which we have been discussing in the past webinars. We were thinking that maybe this market is doing something like this. Again, as I said, this is one of the many scenarios. We also have a bearish nested formation to the downside. But I'm discussing this because if this is the scenario, then this Z seems to have completed the possibly bare minimum leg down, right? So, I mean, as I said, if it has to fall, then it will really get discount and give gap down or something. So I'm taking that risk. But from what do you call conservative perspective, most short sellers would have booked at least partial profits, right? So my position here is quite risky. So that's about it for Nifty, right? Because I'm holding net shorts on the index, I cannot very much give a very unbiased analysis, anyways. So that was my quick and biased view here. Let me know, guys, if there is any doubt, query, question you have in mind. And yes, also, what do you think of our interpretation of this leg and this movement? Were you expecting something like this? It's always important to note these kind of different, or I should say not really different, but kind of rare events sort of things. This will also help us guide in future if there is something like this happening in the markets again. Okay, so guys, let's with that confirmations, let's now head over to our next chart or last chart. Where is that? Okay, it's over there already. Okay, BTC, extremely strong bullish movement here, right? So if you guys remember last time when we discussed this counter, I mentioned very clearly that there are no longs to be taken until we see a movement or a strong move about what is this 24,700 ish level, roughly speaking, right? Basically near the last highs. Okay, we already had this support level drawn, and this is a possible level of reversal, and it seems like this market is reversing from it. The movement is, if I remove all the clutter from here, the movement is definitely stronger, and it is possibly even stronger than the movements within this price action, right? So it most likely will break higher than 29,700, right? If you are really conservative, then you can still wait for that high to be taken and the riskier approach, but with also reducing your risk would be to add longs with stop loss near the lows around 20,500 ish level, something, right? Long story short is that if this analysis is going to play out upside, then it is most likely going up for at least one more leg and possibly what looks to be a wave 3. We do not have the confirmation for it, but the strength of it suggests that. So based on that, I'm saying it possibly can be a wave 3. So the shoot up may be significant. As I said two times already, we do not have the confirmation, right? So generally what we can do in these kind of situations is, instead of getting too excited and entering full size positions, just enter with the uh, one third, or let's say one fifth of the position, right? In that case, even if you are wrong, you have reduced your risk, and if you are right, you can of course add more at the breakout, right? That's the general way to resolve this kind of problems. So you know the rest, right? And also, if this market is really heading higher for wave 3 or C, then we can quickly push out the target levels for it. We can expect 29,400 or higher levels. Higher levels will be 35,481, but let's not get that much ahead. And immediately we are expecting 27,300 followed by 29,400. So these are the two immediate levels to watch out for. With that, I would say we are done with this analysis. If there is any doubt on this counter, do let me know in the comments. And of course, as I have already mentioned, please do make sure to hit the like and share the content with your fellow trading friends in your trading groups, etc. etc. Also, one another announcement, I'm thinking of starting a paid membership on YouTube, nothing private, nothing out of the current ecosystem, right? And I will see how the feedback from you guys goes. If the feedback is good, then we will look to continue it and make it private and add more facilities, perhaps. So currently, I'm thinking that we can run some pools for the paid members and take one or two stocks or whatever scripts you guys like near the weekend, right? I have not fully planned it. If you have any suggestions, you can just type them here or just send me an email. But as I said, the idea is to just run it and see what's the participation like. If the participation is good, we'll look to continue it. If the participation is not good, then I'm also considering closing out this project of trading opportunities webinars, because it does take a lot of time, and it will save me about 6 7 hours or more per week, and I can then push it in finding more trades, right? So let me know what you guys think, what opportunity, what do you call facilities you might like or would find of value, and we will see as we go. Perhaps around the 50th webinar, I'm thinking of launching it. So perhaps if I get the time and plan around and get some suggestion from you guys, I'll launch it in the next webinar or maybe in the next to next. But very soon you will see something from my end. So that's about it from my end, guys. And thank you for joining in live. Thank you for the lively chat. And I'll see you in the next webinar. Take care and bye.